Hey friends, I'm Andrea Garcia Vargas and I'm the social media manager here at Gusto. Here with more tips for entrepreneurs who want to run their businesses better. In other words, all entrepreneurs. Today we're diving into the world of tax deductible expenses, specifically for you, the self-employed business owners out there. These deductions will help you save money by lowering your tax bill. So, if that sounds right good, let's jump right in. First up, who qualifies for these deductions? Well, if you're a sole proprietor, independent contractor, owner of a single-member LLC, then listen up, because this is for you. Next, what is a deduction? Well, the IRS defines a tax deduction as an ordinary and necessary expense. Ordinary means that it's common for all businesses or for your industry. In other words, it's not uncommon to see other businesses with similar costs. No, that cost is not an ordinary business expense.
Why?
Because you're a dentist, that's why. Necessary means that the expense is helpful and appropriate for your business. The expense doesn't need to be crucial to running your business, but it does have to be useful in some way. Yes, cowboy hats are fun, but they're not necessary.
No.
Here's a list of common expenses that self-employed business owners can take advantage of. Auto expenses, business mileage, bank fees, business insurance, contractors, commissions, computer and tech equipment, dues and memberships, equipment rental, event costs, furniture and decor, gifts, self-employment tax deduction, health insurance premiums, home office, interest, licenses and permits, meals, merchant processing fees, payroll taxes and expenses, photography and videography equipment, professional development, office supplies, rent, repairs and maintenance, salaries and benefits, shipping and postage, software, supplies, telephone and internet, travel, website expenses, and startup costs. Phew, those are a lot of expenses. So each deduction helps to reduce your adjusted gross income, which ultimately allows you to pay less tax. Let's highlight a few must-knows. Now, it's important to note that some of these expenses are very easy to take, while others a little more involved. For example, if you want to deduct the miles that you drive for work, the IRS offers a standard mileage rate, or you can track actual expenses. Which one you choose will be up to you. What about a home office? Same deal. Whether it's a little desk in the corner of your living room or a whole dedicated space, it can significantly cut down your tax bill. But there are rules and conditions that you will have to follow to take full advantage of the home office deduction. Oh, and then there's health insurance. That's a toughie. Who knew health insurance was so complicated? I mean, we all know that it's complicated, but it's even more complicated for self-employed business owners. Number one, first off, you can't deduct health insurance premiums if you have access to a health insurance plan some other way. Like, if you have a day job and your employer offers health insurance, or you're married and your spouse has access to a plan through their employer. Number two, your business has to have a profit. In other words, the money you pay for health insurance premiums can't be deducted if your business doesn't make money. You can deduct the total cost of those premiums if, and only if, your business's profit completely covers your health insurance premiums. If it doesn't, then you can only deduct the portion that is covered by the profit. We could spend this entire video explaining all the gory details about taking deductions for health insurance premiums, home office, business mileage. But then it would be a very long video, and we have more to cover. Such as good record keeping, the key to maximizing your deductions. What is it? Meticulous record keeping. Every mile driven, every ad placed, every piece of equipment purchased, every square foot of home used, it all adds up to savings. Staying organized is your best strategy. Use apps, spreadsheets, or the good old-fashioned pen and paper to track everything. When tax season rolls around, you will be ready. Okay, so how do you claim these deductions? As a self-employed business owner, whether an independent contractor, owner of a single-member LLC, you must complete Schedule C, Profit and Loss from Business, on your Form 1040. That is, unless your single-member LLC is organized as an S corporation, partnership, or C corporation. If that's the case, then those types of entities have their own tax forms. Is nothing easy? Why is everything so complicated? Anyway, yes. Schedule C is where you claim these deductions. They're broken down in Part 2 of the form. If you don't see your deduction there, then you can list them in Part 5. What? 5 parts? What? Breathe, breathe. Yes, you can. You can do this. You can do this. Remember, not every deduction will apply to everyone, but knowing your options is the first step to saving big. For the full list of deductions and detailed tips on claiming them, check out the link to our blog post in the description below. I'm Andrea, and thanks for watching.